This is Solomon Davis, Right Side Trader. Today is February 3rd, 2024, and this is a presentation on how to get bearish in the market. This is all for educational purposes only, no trade recommendations here. As we all know, trading is risky. You can lose money at trading. So please check with your financial advisor. Please check with your significant other and make sure trading is something that is suitable for you. I will be talking about, a bearish strategies and ways to get bearish in the market. First of all, your broker may or may not allow you to actually do this, but I'm going to show you some ways around things that you can do as a retail trader and as a beginner trader. Again, trading is risky, and getting bearish in the market is extra risky. That's why, again, your broker may not allow you to do some of the strategies that I will be talking about. One of the things that you're going to need most likely to do any of these strategies is what is called a margin account. That's an account where there's a little bit more flexibility, to actually place these type of strategies. But let's get started, and we'll talk more about that as we go along. As I say, this is going to be about getting bearish in the market. I was planning on putting this out last month, but a couple things came up: birthdays, vacation, bike rides, anything. It's things that I like and I really enjoy doing. Okay, but that's it. But I'm finally getting to it. But let's get going. If you need to contact me, you like more information about this, or you like what I'm doing here, please subscribe to my YouTube channel. Make any comments that you like to make. I try to respond to most people, and I do now. I'm putting my email out here. This is where you can get my email, one of my emails, and I will reply. All right, getting bearish in the market. First of all, what products can you trade to short the market? Getting bearish in the market is also they call it shorting the market, selling the market, and when they're selling the market, you can sell the market and be bearish. You can also sell the market and be bullish, but we're talking about selling the market and being bearish. Okay. One of the things that if you're gonna actually do this and try to get bearish in the market, you need to verify that you are at a top in most cases, or you might be late to the party and still want to get short in the market and be a little bit bearish in the market. But again, ideally, you want to try to get it at the top or near. You want to be near the top. You won't get at the top. You won't be that last person selling or trying to buy, trying to sell that top. That usually doesn't happen, but you want to be close at all. And we're going to look at how will you be able to identify that? And the way to be able to identify that is a lot of times using your indicators. Hear me say your indicators. I'm just talk a little bit about different indicators. And I'm going to talk a little bit about different candle patterns out there to help you identify that top. But again, I'm not going to get into all the different candle patterns that are out there that indicate that are bearish. Because again, when it comes to candle patterns and indicators, nothing is 100%. They're just giving you an indication that the market may be near a top, or maybe something is happening, so that's all it is. It's an indication. It's a pattern that may be indicating that something is about to happen in the market. Nothing is guaranteed. Okay. Now, once you have identified that, and once you're in that trade, you need to you need to think about how long you want to be in that trade, and that goes back again to the charts, your indicators, and they will give you an idea what to expect. Also, if you're wrong, you need to know when to be out of that trade. So I'm going to try to go over all that here in a short period of time. Again, it's not going to be everything, but I hope it's enough to get you started. All right, let's get going. Are we at a top? The thing that indicates if you're at a top or not is kind of like, what is the chart telling you? You need to, in my opinion, when it comes to technical trading, one of the main things that you want to look at is the chart. The chart will give you an ideal that, okay, I may be reaching a top. this market may be turning over. Is it turning over for a long period of time or a short period of time? That's still based on what your indicators and the chart is telling you. Well, another thing that can actually tell you, are we at a top, is volatility. Most people don't look at this, but I know some people do. When volatility is rising, that lets you kind of know that you may be near a top or at a top, or the market has already started dropping when it gets high. And that can be an indication that we are at a top or near a top. Another thing that you need to be aware of when it comes to the thing is, are we at a top, is events. Events that has happened or events that may be happening can give you an indication that we should be at a top, or a top should be nearby. Is based on the events and things that are happening in the world or in the United States or with a particular company. That would help you know if we are near a top and it's time to be bearish in the market. The next thing that we want to do is actually go to the platform, and I'll show you some of these things. One of the things that I want to show you also are these candle patterns that shows up at a top. And I'm not focusing on all of them, I'm only focused on the 3 that I like, but there are other ones that shows up that kind of gives you an indication that we're at a top. That's studying for you, to figure that out and see what you see when the market is at a top and it may be turning over. But the 3 patterns that I want to go over is an engulfing pattern, a Harami, and what is called an evening star. These first 2 are 2 candle patterns, and the third one is a 3 candle pattern. Let's just go to the platform and let me show you, what I'm talking about. Go right here, and you should be seeing my chart now. Let me get where I can see something else. Yep, I can see something else. Okay, the thing is, the first one that pops out to me all the time, one of my favorite patterns, is an evening star. Evening star, like I had first said, is usually a 3 candle pattern, and we're looking at the ones at a top. You want it to be at a top. You really don't know it's at a top at the time. But on this IWM, you can see we were making new highs, new highs, new highs. Then we ended up, one of the things that you hear me talk about on my videos, if you watch my weekly market reviews, I talk about higher lows and higher highs. And then once we get a lower high and a lower low, and then another lower high and a lower low, and then we end up with a pattern, this 4 candle pattern right here that I'm looking at. I'm going to zoom in a little bit here where you can see it maybe a little bit better. And back up just a little bit. I know I kind of hate doing that on you, but this is it right here. I'm going to go ahead here, and kind of highlight it. It's these 4 candles right here. It's not a 3 candle. Everything is not going to be perfect in the market. For you guys who need things to be perfect, it's just not going to happen that often. But what you will get things like this, where you had a green candle, and a lower low, lower high, lower low, lower high, red candle, and then confirmation of that pattern, and then a follow-through candle of that pattern. And this right here is that evening star that I was talking about. And then the market didn't drop that much, and that's where it gets to that time about, on these particular patterns. So that's your evening star that you want to be looking out for. Now the other 2 patterns, let's see if we can go ahead and take a quick look at, see if we can find some of those. And as you can see, yes, I'm in the live. Here's your Harami. Your Harami is usually when you have a green candle and an inside, what I call an inside red candle. Your high is going to be lower than your previous day high. Your low will be higher than your previous day low. And ideally, you would like it to be a red candle and all. And what I'm talking about here, let me delete this. Let me remove this drawing, and let me put a drawing over here for you where you can see what I'm talking about. I'm talking about those 2 candles right here. Activate. And let me see if I can, right here. Those candles right there. That's what's called Harami. You'll see them throughout the market. They happen quite often, and all, but not as and you want it to be at a top. Again, this market had actually came up. This is where the market had came up above a level that I wanted to come up. I'm on the daily chart. You see them on all time frames too. They're more. It's high. It's a higher, probably a higher probability of them actually working on the higher time frame. Higher time. I don't know if that's true. I can't say that. I was going to say that it's probably a higher probability of them working on a higher time frame, but I don't really know if that's true or not. You know. But on a minute chart, you can't expect much out of it if you a minute chart. So that's why, again, you never really see me with a minute chart. I like only going down to like a 5-minute chart, you know, when I do actually day trading and looking at stuff there. But here, as we can see, again, we had the Arami. We had confirmation of that Arami, but we didn't get follow through. And I'm looking at these other candles right here. This was our confirmation candle. Edit properties. Let me just make this large, extra large, and let me turn it back this way. Okay, and let me activate. This is my confirmation candle right here, and this should have been my follow-through candle. Let me go here and go here. Edit properties. Let me make it extra large. Let me go here and let me go here. That should have been my follow through candle, and it didn't follow through. I would expect it does have a lower high and a lower low, and this next candle does have a lower high and a lower, but not a lower low. So again, right now in this market, the way I analyze it, this market is still kind of inside of this confirmation candle. It really needs to have a close below this low right here to be a follow-through candle. Right now, this is the Russell that I'm looking at. The Russell can actually end up going sideways here for a while before it actually even drops, if it's going to drop. But we have had the bearish-looking pattern. We have had the follow-through candle. We have had the confirmation candle, and let me get that right. But we haven't had the follow-through candle. So, and that's on the Harami. Now let's see if we can find an engulfing candle. I'm actually switched to another product, Apple, AAPL. AAPL. And on this chart, let's just take a quick look at Apple. And on Apple, I do not see anything here. Let me go back a little bit. And see if here's one right here. This is what I was looking for. Okay, let's just zoom in right here. Right here. This is an engulfing candle. Again, like I say, you perfectionists who want things to be perfect, you're not going to find it most of the time. But if you see something like this right here, the market was going up, 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 up. You ended up getting a doji. You ended up getting a red candle that engulfed, you know, the previous day candle. I'm on a daily chart. And that's what is called an engulfing bearish engulfing candle pattern, a 2-candle pattern. And it did actually get a confirmation candle. And again, look at this follow-through candle. This follow-through candle, we did end up with a lower high and a lower low. And then again, it did struggle a while before dropping. We didn't quite, it's just like what we were seeing on the Russell, on the Harami candle, where it did get a lower high but not quite a lower low. Then another inside day, then it finally started to drop. So again, that's where it gets the next area that I'm gonna be going to. Not the next area that I'm gonna be going to, but in the end, you need to actually know how much time you need to give these things, and you need to know where you're gonna stop yourself out of these things if they're not actually working at all. So those are the 3 candle patterns. That was the engulfing, the Arami, and the evening star. I actually showed them to you there on a chart. The other thing that I want to show you right quick is, you know, I'm not showing any indicators. All the indicators that you see here on my chart are these pivots that I like showing. That is kind of okay for me to show all the time. And it actually followed my rule all the way down the way I like using indicators. One of my rules on indicators, if it gets on the pivot, it stays on the pivot. These are daily pivots, though. I usually have a higher time frame pivots on here, like a weekly pivot to give me an idea what's going on for the week, and that's what I kind of expect. But each individual day, once I get on the pivot, I expect it to stay on the pivot, 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 on the pivot. And it kept dropping just like that, and not until we got above pivot, and it stayed above pivot. But the next day, it ended up on the pivot and continued to drop. So that's just one of the simple things that you can see, and all. But where I was really going to was here. I want to go to studies on this particular platform, quick studies, and then bearish candle patterns and indicators. As you can see, I don't know how well you can actually see that. I wish I got to get me a better setup where I can actually zoom in on some of this stuff and the different things that you can see. What I'm looking at is bearish only candle patterns, and there's a list of candle patterns here. Advanced block, dark cloud cover, deliberation, downside gap 3 method, downside something else gap, evening doji star, evening star that I did go over. And these are indicators to help you see bearish patterns. That's the whole thing. But then you have all your other indicators that are out there, your ADX, your CSI, your any and all. MACD is another good one. Any and all these different candle patterns that are out here. So again, there are tons of indicators that you can actually use and actually learn to use to see the market if it's bearish or bullish that I want to show you. All right, that's enough of that for right now. So that's it when it comes to, I want to go on the platform, kind of show you different things there, show you the different candle patterns, and that's it. So now that we've talked about all that, the question is, what can you actually trade? I went too far. It went too far. Okay, what are the products you can trade to short the market? Now that you know, okay, the market is going down, so now what can I trade? You can actually sell stock, not every stock, not every, I don't know about every index, or you cannot sell everything that's out there. And sometimes your broker, the market, whoever, the SEC, they come up with certain rules where certain stocks and certain products that they will not allow you to short. Because they don't want you crushing the market. The big money actually sending this market in a tailspin. So they will not allow certain things to be shorted. So that's one thing. But you can sell a lot of stocks and stuff. You can sell shorts. There are a lot of ETFs out there that are built around the downside of the market, and you can just buy that product to go short. The other thing that you can actually do to get short in the market is buy a put option. Buying a put option is actually saying, I believe that the price on this particular underlying, whatever it may be, index or stock, will be lower, and as it goes lower in the market, your put option that you purchase will actually go higher in price. So you will be able to buy your put option at a low price and sell it at a high price. Just the opposite of what you would be doing with your stock. Your stock, ideally, you want to sell it at a high price and buy it back at a low price. I didn't say that at first, but stock, ideally, you want to sell it at a high price and buy it back at a lower price. That's the whole thing that was going on with GameStop that you all heard about, and most people heard about. The hedge funds was thinking that GameStop was overpriced, overvalued, and it should be going out of business. So they were short the stock selling it and selling tons of it and anything and everything that they can grab and expecting the price to go lower. And they were expecting to buy it back lower and or not even buy it back at all if the company went completely out of business. So they would get to keep all the money that they collected for selling that stock. And that's one of the games that they play. But in that particular case, the retail traders came in and said, one guy in particular, from what it sounds like from watching the videos and the TV movies that they've made about this whole thing, that guy said the company was good. He was buying the company, and he rallied people around to buy the company and caused the stock price to go up. So that's why I'm saying you have to get to a point where when are you wrong if you are shorting a stock and get out of it. Because as you saw from that movie, it can get really bad, and that's why your brokers will get where they don't allow you as a retail trader to do it. Because when it gets really bad, it can be you can end up owing more money than you was intending to make on the stock. That can happen when you're selling stock short. So, and that's what it's called, a short squeeze. When you get a short squeeze, price is going up higher than all, and then the persons who actually sold the stock have to actually buy it back, causing the price to go up even higher and faster, and it just causes some craziness in the market. Now, the other way that you can actually get bearish in the market with options that your broker may allow you to do when it comes to selling options is sell a call spread. Normally they're not going to, and you wouldn't want to sell a naked call. Well, you wouldn't want to, they wouldn't allow you to sell a naked call. They say in order for you to sell a call, you need to hold the stock. But you don't want to hold the stock if you expect it to go down, because again, now you sold that call and collected some money. But if that stock that you're holding loses all its value, you probably didn't make enough money to cover the amount of money that you actually lost on the stock dropping. So that gets back to where people buy puts to get bearish in the market. They buy puts to protect theirself from downturns in the market, and it's also a way of getting bearish in the market. Now, a fourth way that I will talk about of getting bearish in the market is selling a future contract. A future contract is different than selling options. A future contract does have expiration dates on it, but you don't have any of the volatility or theta decay or any of that kind of stuff. And that's a different product, to sell in the market with not as many moving parts. Because when you are trying to get short or get bearish with the options have expiration dates, plus they are affected by volatility in the market. If you're buying that option, that volatility helps you. If you're selling that option, that volatility can actually hurt you. So you have to be careful when you're using options to get bearish in the market. You need to be right in direction, and you need to be right in the duration you plan on holding those options. All right, but let's go ahead and take another look at the platform right quick, and I'll show you some of these things and show you what they look like, and all right quick here. I have to go over to my trade tab, and on my trade tab, let's go back over to let's go back to Apple. Because again, if we're going to talk about shorting stock, say I was thinking Apple was at the top. It was like this, and I want to sell short that Apple stock. One of the things that's going to be required is you're going to have a margin account in order to short stock. Because again, you are borrowing stock, and they don't allow you to borrow stock in most cash accounts. There might be an exception to the rule, as always, but in most cases they don't. And in order to sell that stock, what you're going to do, you're going to be clicking on the bid as I see it, when I click on the bid, my ticket comes up, my order ticket comes up as a sell. 100 shares. You don't have to do 100 shares. You can do 1 share. And I do a confirm and send. There's going to be some margin requirement in order for you to do that. So again, it's going to affect your whole buying ability, but the credit that you're going to receive is usually much greater than that buying effect power at all. So again, there's a calculation where you're going to do it where it's a break even, if you're doing this particular type of trade. Again, you sold something, you received a credit. Now your ideal thing is for you to keep that money at all. So, but that's how you do it. I can do a send, and this is a margin account. It will allow me to do that trade and all. So I'm going to cancel this order because I do not want to do that at this time. Now, the other thing I talked about was options. Let's go back over to our trade tab on this particular platform, and options. Options are contracts. They have days. The key thing that I'm not going to get that deep into options, but the key thing that you got to realize, there's a time to expiration and all. So you have to give yourself enough time to be right. The other thing that you're going to be fighting is if you are selling. First of all, let's talk about buying the put. If you are buying the put, again, you're buying it at a low price. You expect it to go up in price as the stock market drops. So a couple of things the main thing that's going to work for you here is direction. The other side piece that's going to actually help you out on this is volatility. Because usually when the market drops, volatility increases. Let me just go here. Let me go here. Implied volatility and probability of out of money, but that really doesn't matter. But I just want to show you where implied volatility is at now, and this number will actually increase as the market drops. And when it comes to buying a put, you're going to be on the X, and I just randomly picked 13 days. You need to actually look at the chart, see how many days you expect it to get to the point where you think it's going to go to, and select an option based on that. Also taking in consideration of another piece here is theta. On your theta, your option is on each day. Say you're trading something that only moves 10 cents a day, and it moves 10 cents a day to the downside, your theta decay is going to subtract 10 cents from it. So that means that you net, you're zero. You didn't gain anything on that particular option, even though the market moved in your direction. That's the thing when it comes to buying options. You need to be aware of the moving parts. So that's why I say be careful when using options to play the market. And all, make sure you really understand them and all if you're going to do it and all. So buying an option though, but buying a put is fairly easy. All I have to do is click on the X price, whatever the X price may be, or anywhere in between the bidding and the X, according to how aggressive I am. Select ever how many contracts that you want to purchase. All you got to do on this particular platform is do a confirm and send. Ever how much that actually costs you, ever how much money it takes to buy that option, that's the maximum amount of money that you can lose when it comes to, like I said, selling that stock. It's not really the maximum amount of money that you can lose. You can lose all that money that you collected and then some. Go back to your GameStop. That's what happened to those guys and all. So that's why option, in most cases for retail traders, this is why they allow you to do this. And when it comes to options, if they allow you to trade options, first of all, they know, and they always will allow you to. Usually, they allow you to trade options, and they allow you to buy options, because any money that you spend, you have to have it in your account, and you can lose it all. And all. That's the whole thing. So on this particular trade, me buying this option, the most money that I can lose on this particular trade is this $2,500 and 25.8650 to be exact, plus the commissions. So that's the most that I can actually lose on this option trade when buying. So, and I'm going to delete that. Now the other, let me delete it all the way. The other way of actually getting bearish in the market with option is selling a call spread. Selling a call spread usually is not the way most people like doing it, but I like doing it. Because it brings in, again, it brings in a credit. I'm on Apple here again. This particular trade is going to bring in me a 60 cents credit. That's actually $60 for every contract that I'm selling. And I do a confirm and send on this. Since I'm doing 10 contracts, so that's 10 times that 60, I ended up getting $600 on this particular trade. And when you are being bearish in the market on a stock using option and using this particular strategy, your couple things are actually working for you instead of just one thing. The thing that's working for you here is time. Time needs to go by and this thing can expire worthless as long as the price of this underlying doesn't go above the strike that you actually sold. I would end up being able to keep this entire $600. Now, the maximum loss on this trade, that's the other thing compared to selling, again, when it comes to selling stock where there's no limit on how much money you can actually really lose. When you sell, and on a call that you actually sell, there's no limit on the maximum money that you can actually lose. But now when you do a call spread, there is a limit on the maximum amount of money that you can lose. And on this particular spread, since we, let me delete and let me do it a little bit different. I want to do it, this is Apple. Let me go to IWM. The reason I'm going to IWM is because it has dollar with 50-cent whips and all. And I'm going to do a dollar whip. And I'm going to do it again. So right now, let's take a closer look at this. I expect if I'm selling this particular call spread, I'm just doing this random, no trade recommendation here. This is for demonstration and educational purposes only. What I'm trying to show you, I'm selling a 195, and I'm gonna sell a 19, and I'm gonna buy it back at 196. That is what's called the spread between the strikes. So it's a dollar spread between the strikes. That's in option terms. That's $100. So the maximum that I could lose on this trade is $100 if I didn't receive a credit. But since I'm receiving a credit, I'm doing a sell vertical. I receive a 22 cents credit. That's $22. So now that's going to mean that it's going to be, what, 78 cents is the maximum that I can lose, is $78 minus any commission. So times ever how many contracts, and we only doing, this is a 50-cent wide. I thought I did a dollar wide. This is a 50-cent wide spread. So it's still let me change this up. I can change this right here, make that like that, where it's a dollar wide. So now the credit that I'm receiving is a 43 cents credit, which is pretty good for a dollar wide spread, and the max that I'm gonna make on this the maximum amount that I'm gonna make on this trade is $43 times the number of contracts, which is 10. The maximum that I can lose on this trade is the difference between this 43 cents and a dollar, which is 57 cents. So let's go ahead and do a confirm and send, and you will see that. So the maximum that, since I'm doing 10 contracts, the maximum that I'm gonna profit on this trade is $430. The maximum loss on this trade is that $570 on this trade. If this thing goes completely wrong on me, but if it goes completely right on me, I get my $400 and some dollars. It goes completely wrong on me. The most I can lose on this trade is $570. That's because I collected $430. The spread is $1 wide, so it would just collect the rest of that 570. The broker would get the rest of that $570 out of my account. It might seem a little complicated, but once you've done these, it's a very simple strategy, a strategy that I don't mind doing in all that time. Not this particular trade. This is not a trade recommendation. This is just demonstration, educational purposes only. But I'm just trying to show you this is a way of actually getting bearish in the market, and what you are saying that you do not expect the market to go above the strike that you actually sold, which was that 195. That's the thing when you start talking about options, it gets a little bit more involved. Now, the other way of actually getting bearish in the market is just selling a future contract. Let's switch over to a future contract, and what we're going to switch over to is the IWM micro contract, and it's called M2K. This contract doesn't have any options, so there's no options to trade on it at all. But what I want to show on here with this particular, when it comes to future contracts, they have expiration dates, and then new contracts come out probably about 4 or 5 a year. These are the expiration dates, and this is how they come out right here. It's four every year. Right now we're trading we're in the March contract that's going to expire in 41 days. And here's are the other contracts that are actually available out there. Right now you can see the different volume that's on these particular contracts and stuff. So I'll give you an idea of what's happening out there. So say I want to sell a future contract. I would normally, not always, based on your strategy, based on your time period of what you see out there in the market, how long you expect to be holding this contract and what you expect in the market and where the market is at right now. But in order to sell a future contract, all I do have to click on the bid. It comes up, future, sell, one contract. It's a March expiration, and there's a limit price on here. So now the thing is with future contracts, they're traded in ticks or points, you may want to call it. I'm going to get quickly into a Russell contract is divided into 1/10. You know, the ticks are 1/10. Then a full point is a full point. You know, for every point, there's 10 ticks. And every tick on a every point on a micro contract is $5. So that would make every tick 5 divided by 10. What is it? Man, I am being an airhead right now. It's 0.5. 50 cents. I couldn't do that right quick. So every tick this thing makes, you'll be making 50 cents since it's a micro that I'm trading, a micro. And it's from the point that you actually sold it at in the market. Right now, the Russell market is at 1964. So your expectation is that the market is going to be dropping, and you're going to be buying it back at a lower price. For every point that it actually drops, you make $5. For every tick that it actually is dropping, you make 50 cents. Now, again, this is one of those ones where it has to be on a margin account. These trades can go really bad against you and all, and your broker may or may not allow you to actually trade future contracts, because future contracts are almost like really comparable to selling stock short. The only thing with future contracts, you do have an expiration date, and your broker probably will stop you out of a future contract if it starts going against you. So that's one of the things to be aware of. As you can see on this particular thing, it doesn't really show a credit received, unlike your option when you sold an option, or even when you sold stock. This thing, it has to move in the direction that you want it to move before you start making money. Meaning it has to drop, it has to be 1 point less in order for you to make $5. So that means the price has to go from this 1964.50 to 1963.50 in order for you to make $5. The other thing with buying power effect, this might be an overnight margin requirement, or that might be the full. I think that looks more like an overnight margin requirement for this micro, because usually it's a little bit less, but this might be what it is for this particular platform. I do not know. There's something that you have to, based on the broker that you're with, you need to find out all those requirements. There is a buying power effect when you actually sell these things, so you have to be aware of that too. But if you're pretty good at, if you think you are pretty good at calling direction, these are not a bad thing to use. Options once you get good at options are not bad either. Those are the two that they usually allow retail traders to trade. Not options, or sometimes, again, it's all still based on your account size, if they're going to even allow you to sell stock short. But those are the products that I think, and there's million of, probably, I say million, there's a lot of other strategies that you can use around options and stocks and futures to actually get short in the market. So what I went over there, that was kind of long, was selling stock short, buying a put. Selling stock short, there's going to be, you're going to collect the credit, and you just got to be careful and not let this thing go against you. Buying options, you only write in one direction. It has to drop. Buying an option, again, you're going to put out, selling, first of all, selling stock, you're going to actually collect some money, and you get to keep that money as long as the market goes in the direction that you expect it to go. And it's all going to be how much are you willing to get back once it starts dropping, because you're selling at a high price and you expect to buy it back at a low price. Options, buying a put option, you're going to actually spend some money. You've got to be right in the direction, and the market has to drop, and it has to drop enough to overcome any volatility that if it ends up dropping on you, which usually is not the case if the market is actually dropping, and it's going to have to overcome theta decay when buying this put option in order for you to make money. So the price has to be lower. You have to be right in direction, and you're going to have to be right in duration. Time cannot go by faster than the market is actually dropping. That's what that means. Now, one of the other ways you can get bearish in the market with options that I went over is selling a call spread. Selling a call spread, you will collect some cash. You got to be right. And the thing is, you got a couple things actually working for you here. You got to be right in direction somewhat. It just has to stay below the strike that you actually sold, and you're going to have to be right in duration. Meaning that enough time has to go by in order for you to collect some credit. The key with this one, you will get some cash in your pocket. And the thing is, the ideal thing is the market goes in the direction that you expect it to go, and you try to keep as much of that cash as you can. Have a target in mind of how much you really want to keep. In the future market, you don't really collect anything when you sell. The market has to go in the direction that you expect it to go in order for you to make money. And in most cases, in all cases here, you're going to have a margin account in order to actually do any of these trades. Okay. Now the last part that I want to go over is time to be right, which I kind of covered a little bit when talking about the different products. But the thing is, when it comes to time to be right or wrong, it all is based, in my opinion, is based on when you enter that trade. When you enter that trade, you need to done your analysis. You have to understand your strategy, understand the indicators and things that you are using, to actually make sure, based on the product that you're using, if you're giving yourself enough time to be right and all, or wrong. Now, on that entry, you got to remember, in most cases, you are collecting money. The case that you're not collecting money is if you're buying a future contract, you don't collect any money. But when you're selling a future contract, the market has to go into your direction. When you are buying a put, you're not collecting any money. The market has to go in your direction. But the strategies that I like, if you can just sell that stock short, you're collecting some money. Or if you sell that credit spread, you are collecting some money. And ideally with those, just don't get greedy. Once you've made some money, be willing to take that money and all. Like I said, the goal is to keep most, if not all, that money that you collected. And that's the thing. Usually you're getting greedy if you're trying to keep all that money that you collected. So now, what if you're wrong? How do you know when you're wrong? Me, I say, if the market is above my entry, you may be wrong, because you expected the market to go down. That's why it gets back to that entry. You need to time that entry, like nail that entry. It's okay to be a little bit above the top, and maybe that top you're willing to, you can, in some cases, it can go above that, all based on your entry. It can go maybe above the top, whatever you are calling your top, and you will still have a small credit, and it's just time to get out. Because you may be wrong. And it's better to have a small profit or a small loss than to have mother of all losses. That's one of the things I used to say. I saw it somewhere. And the thing is, when you do any of these getting bearish in the market and putting any of those strategies on, is to have a target in mind. A target to where you want to take profit. Also, a target where you need to be out of the market, And even if your target for you to take profit, and that market keeps dropping, none of this, I woulda, coulda, shoulda, at that point, just get out of the market, because you made the money that you was expecting to make, and just be happy, So that's all I really, really, really want to share. Hope this has been, I hope this has been helpful. This is Solomon, Right Side Trader. If you like this and you want me to do more of this, I will probably be trying to do something like this in the future. Just let me know. If you have any comments, put them down in the comments. If you like it, share, subscribe, and just tell me what you think. Other than that, hope you guys had a great week. Hope you guys having a great weekend, and I'll talk to you later. Have a good one. Bye.